Hello, Facebook Live watchers. This is Mark and Tamiel Kenney with Think Multifamily, and we are talking today with Madison Title. How you doing today, Brian?
I'm doing well, doing well.
Good. Is it raining where you are?
It is actually, believe it or not, it's kind of nice.
Oh yeah. Well, unfortunate part is we have to take our kids to school that way. So
normally they ride their bikes, and both this morning are like, am I supposed to ride my bikes in this weather?
Yeah, but they love it. I mean, there's puddles everywhere. That's the best part of going. So I say I have two little boys, 3 and 6, and puddles is pretty much the best part of their day.
Oh yeah. I know. I was just saying. Thanks for joining us. We know you're super busy, and really appreciate what you guys do over Madison. And you're going to be coming to the Fire Summit.
I am. I'm really looking forward to it. We got a lot of people actually really looking forward to it.
That's awesome. And you're going to be doing a kind of an in-depth talk about multifamily in particular and some of the tax advantages. And we're excited about it because several years ago doing IT, I paid a lot in taxes, and unfortunately, when you have your own business, you pay usually every quarter, so you get reminded 4 times a year of all the money you're paying for taxes. But since we've switched to be full-time real estate investors, we haven't been paying any federal income tax at all. We don't have state income tax in Dallas or Texas, so that's good.
That's right.
And a lot of the benefit is from kind of what you guys at Madison do around cost segregation and like bonus appreciation. So maybe if you wouldn't mind just giving a kind of brief overview. I know you're going to go a lot of detail at the Fire Summit, but kind of brief overview why this may be the important topic for people from a tax perspective.
Oh yeah. So specifically, it's a tax strategy. So cost segregation. What a lot of people think of is, oh, it's great. You can save on taxes on when you buy the property, and then you sell it, and then you have to pay some of it back. But what a lot of people don't realize is the in-between. When you buy the property, you've got your active investor, the main sponsor, and the passive investors. Everybody gets a piece of the pie. So a lot of people think it's just good for active investors, the main person. But what most people don't know is that the passive investors get actually the bulk of those tax savings. So passive investor on 1 property, 2 properties, 3 properties, it can trickle down and have an effect on everything that they own. But it's all based on, it's a tax strategy. That's exactly what it is.
Yeah, people get confused a little bit by it, because just the other day someone pinged us saying, he's in our group saying, hey, he's trying to explain depreciation to an investor, and the investor just isn't getting it because he doesn't understand kind of the, it's a paper benefit, a paper loss, right?
Yeah, absolutely. Absolutely. I mean, when I start talking about depreciation, cost segregation, cost segregation is a terrible word. I always say, accelerated depreciation.
Yeah.
But it's simple as that. I mean, it's a depreciation by tax law. So any income producing property has to be depreciated. So what most people do is, oh, that's great. I can have a little bit of a loss on my property. But what it is, you get the same exact amount of loss that you can you file for 1 property every single year for 27 and a half years. Because when you buy a multifamily property, it depreciates over 27 and a half years. What you don't realize is you're taking all the assets, the interior stuff, the exterior stuff, the buildings, windows, walls, everything, you're just dividing it by 27 and a half. And that's how much you're getting every year.
Right.
The beautiful part about that is you don't have to do that. What you want to do is you want to reclassify everything. You want to bring things back down to where they're supposed to be, your 5-year assets, your 15-year assets. You want to break it down into shorter life components, which allows you to take a lot more depreciation and write off a lot more losses during the years 1 through 6.
Is there, and I put you on a spot here, if it's not, it's okay. Is there a general rule of thumb in doing cost segregation of what the percentage tax benefit is additional? So the additional tax benefit in general cost segregation study?
Oh, sure. So multifamily properties in particular, you can see anywhere between 30 to 35% of the initial purchase price minus land You just basically take, let's say, for instance, you buy a property for $1 million, all right, and you take off 10% for land value. That leaves you with 900,000. So basically 30% of that, which is 270,000. That's what you can expect to see accelerated to years 1 through 6, or with a new bonus depreciation, which I'll be covering in detail at the Fire Summit, is you can take all of that in year 1 and apply it across your portfolio.
Yeah. And it's great, I think, that you mentioned it's for both passive and active. Mm-hmm. If you're a real estate professional, which, some people are, some people aren't, but then even for us, when we syndicate a deal, even if you put, you were not even an investor in the deal, but you end up doing a deal. We have, examples from 2018 for taxes where $430,000, depreciation on one property, and we have like 30 properties. So you can see where you could, Trump didn't pay any taxes, right?
That's right.
And chances are he probably makes more than most people listening to this Facebook Live. But there are legal ways to do it, and you need to consider that when you're looking at different investments and you're comparing, stock market to multifamily investing or other investments. That the tax advantage is huge in that respect.
Absolutely. And that was the big thing. And, going to Trump, and I'm not political in any way. I'm just making sure that's out there. But going to the Trump, the whole debate between, Trump and Hillary Clinton, where, she claimed that he hadn't paid any taxes, no federal tax, no real estate taxes or anything in years. And he just said, this because I'm smart. He knows about depreciation. He knows about active losses and passive loss, and he knows about it all. And it's not a high up thing. It can be for the
small in the debate, and Hillary is saying, hey, and Donald paid no federal income tax, and then Trump interrupts and said that makes me smart. Right. And reality is, is Brian's point, doesn't matter what you think politically about him, but as a real estate investor, the advantages you get by not paying taxes is huge. So Brian will be talking about this in detail. He mentioned a term too called bonus depreciation. If you're not familiar with that, that makes it even that much sweeter. And I can tell you, it's a very good, happy feeling. I tell people I'm gonna do a cartwheel. I can't do a very good cartwheel actually, but if I could do a good one, I would do a cartwheel when we stopped paying federal income taxes, and we won't pay any for 18, won't pay any for 19, and hopefully my goal is to never pay federal income tax again the rest of my life. And if you would like to pay no taxes, tell us that as well. We'd be curious to know if anyone says they want to pay taxes. We actually remember, you might remember this, Tamiel, at an event. This guy was saying, his goal was to pay $1 million in taxes every year. Well, just so he could probably essentially brag about how much he's paying in taxes. It's like, no, my goal is to pay zero taxes. I'd much rather pay zero than, someone from California on there, Carlos. So unfortunately in Orange County, California, you're paying a fair bit of more taxes than most anyone else in the country. But beautiful weather, so we get that there, and I love it out there from a weather standpoint for sure. So really appreciate everyone's time.
We're going to end the show. If you guys who are watching have any questions for Brian, please put your questions in the comments here, and we'll send those questions to Brian, and he can respond to you. But you can also ask Brian in person by coming to the Fire Summit on September 7th and 8th in Dallas. You can check us out, the Fire Summit. I'm putting it on the screen for you. Oh, I just had it on the screen. There we go. thinkmultifamily.com/Fire Summit. And if you want a discount code for the Fire Summit, you can enter FRIENDS as your discount code for $200 off. If you have any questions for Mark and myself, just go ahead. Also, put that in the comments, and we will get back to you right after the show.
I see Emily said she's running while she's listening to this. So
nice.
Emily needs
She's in Portland, Oregon.
She needs to pay better attention to what we're doing here. No, we know Emily well. We're good friends with her, so appreciate her tuning in. And California, we see it. Yeah, so perfect.
Okay. So Brian, there are some questions coming in for you. We will go ahead and forward those questions to you. And I guess that is bye for now, Facebook watchers. Thanks for watching.
Take care, guys.
Bye.